Welcome back. Now, the Union government is the largest shareholder in Vodafone Idea. The government owns just over 33% of the telecom companies after converting adjusted gross revenue dues worth more than 16,000 crore rupees into equity. The Vodafone Idea stock, of course, is rallying even as we speak. However, analysts say while the move is a near-term positive, Vodafone Idea needs billions of dollars more to arrest the loss of market share. Rima is here and she's walked across to the big wall to get us the details. Rima, over to you.
Thanks so much for that. So finally, some good news for Vodafone Idea. After over a year, the government has given the go-ahead to convert 16,000 crore of AGR dues into equity. So let's start off by telling you what this means for all the individual players and stakeholders. Now, for Vodafone Idea, this is a near-term positive, a big sentiment booster. The government now appears to be committed to the future of Vodafone Idea, and now with an implicit sovereign backing or a guarantee, Vodafone Idea can go ahead to the banks, raise some money, or look to refinance their loans. Dues to vendors can be repaid, like Indus Towers or even ATC. Remember, Vodafone Idea's proposal to issue 1,600 crore of debentures to tower company ATC Telecom was contingent on government approval. Now that the government approval has come through, ATC can also be repaid. Remember, no fresh money is being infused into Vodafone Idea, but as BOFA says, it would free up some cash flows for Vodafone Idea. This, coupled with potential capital injection by the promoter, the timing of which is unknown, should help Vodafone Idea clear the pending dues of tower companies, vendors, and also invest in 5G. Now, for Indus Towers as well, this is a very big positive. Indus Towers, remember, has been writing down receivables from Vodafone Idea for the last 3 quarters. In fact, because of the receivable write-down last quarter, Indus Towers had posted its maiden loss. But now the expectation is that Vodafone Idea will be able to repay Indus Towers, and therefore the receivable risk from Vodafone Idea reduces, which is why Indus Towers has been rallying in trade. Now, for Bharti Airtel and Reliance Jio, just in the near term, this could be a bit of a negative. Because as BOFA says, the current move drastically reduces any risk of Vodafone Idea going into NCLT, and the pace of incremental subscriber gain from Vodafone Idea, which was going to Bharti and Jio, would reduce. In case anyone was pricing in a duopoly for Bharti and Jio, that unlikely is going to happen now. That said, the road ahead for Vodafone Idea isn't easy. Again, I'm picking up the report from Bank of America, and they're saying that according to their checks and in discussions with vendors and tower companies, indicates that Vodafone Idea is significantly underinvested in fiber, 5G, and core telecom infrastructure. Vodafone Idea would at least require $6 to $8 billion investment to narrow the gap. This means that the company will need to raise external funding to start 5G. One from the promoters and also from external investors to kickstart its 5G plans, because peers are racing ahead with the 5G rollout. And finally, the elephant in the room when it comes to telecom companies are tariff hikes. Tariffs will be needed for a long-term sustainable pickup in cash flows for Vodafone Idea.
All right, Rima, thanks very much for putting that in perspective for us. Deepak, good afternoon. Surabhi here. Let me take this question to you. I guess Vodafone Idea, a lot remains to be seen. Rima highlighted a lot of these points about how do they get really back in the market. My question is more about Indus Towers, really. The stock has really gone through the motions. It's halved from its peak levels back in September of 21. How much of a cushion does this provide? And would you have any interest in Indus or even Vodafone Idea for that matter?
No interest will be. In fact, I think Rima put it well. There's an uphill task ahead for them despite this. I mean, the problem with Indus Towers is, it has a receivable from Vodafone Idea. And if they've managed to let this go 1 quarter down, then, they've staved off, the issue hit for now. But the problem of Vodafone's balance sheet still remains. They're 75,000 crores in terms of negative equity. That means their equity is gone and they have accumulated losses effectively of another 75,000 crores. Technically, this means somebody has to infuse 75,000 crores of equity for it to be just a going concern. Beyond that, they're going to need more equity to support debt and so on. What the government has done is convert 16,000 crores. So they still have about 60,000 crores of negative equity. I don't see anyone putting that kind of negative equity in added up. So their ability to refinance loans, even after this, the fact that they will have 198,000 crores plus of AGR plus other dues that are payable, over a period of time. I think over 10-15,000 crores per year will accumulate just on that. They have 20,000 crores a year of depreciation, and their operational cash flows are less than 20,000 crores. So they're going to be net negative despite this conversion of dues to shares, and that was just interest cost to shares by a very large margin. So Vodafone Idea again is going to come back into this problem if somebody does not invest, $10 billion into this company in the next year or so. And I don't see that happening. So I think Indus Towers, and again, we have no interest in either of these companies, has, I think, a problem going forward, if not now. Now they may be able to heave a sigh of relief and hope that some payments come through. But I think this is still an issue of survivability for Vodafone. And looking at the way they're losing subscribers, even the operational cash flows may not be that attractive. So, I think it's just kicking the can down the road and a temporary set of excitement for the investors in Idea.
Another beneficiary of this or of today's move is IndusInd Bank. Vodafone Idea, Vodafone Idea's dues to IndusInd Bank stand at close to about 3,500 crore rupees, and that's about 1.3% of its book. And that's the reason why IndusInd Bank is also fairly excited in trade. Deepak, you don't have interest in Vodafone Idea or Indus Towers, and you don't believe this news is a long-term positive. It's just kicking the can down the road in terms of troubles. What about M&M Financial? There is a new management. There's a management change which has been announced. The numbers look fairly attractive. The stock has surged 8.5%. Is that something which interests you?
Yeah, I mean, it's actually since the results, I think the last time we looked at it was when there was this issue with the RBI, asking it to do certain things like that. And then we were like, okay, let's avoid until the numbers start to come back. All NBFC numbers are starting to look attractive this quarter. I think so does M&M Financial. There were some issues with the program where they were lending cars to drivers on Uber, and there was, some NPAs that were a result of that. I don't know how that has progressed, but overall, I think it's a very good business per se. And NBFCs right now are able to grow at a substantial pace. We're seeing both bank lending to NBFCs and NBFC credit growth also moving at a scorching pace. So I believe for this year it might be attractive. Again, I don't have any specific things for M&M Finance per se. But I think the whole NBFC space is attractive right now. We have some investments, but looking forward to some more numbers before we commit.
Okay, all right. Deepak, we'll leave it there. Hope for a longer chat, but we've got stories coming in thick and fast. It's a busy day as always. Thanks indeed for joining us with all of that. Hope to have you back soon.